right, what's up everybody? Good to see you. We'll just do a quick audio and visual check. So if you could hear me and if we are streaming in 1080p, just go ahead and give us a thumbs up in the chat and we will get started shortly. Very cold, very cold night in Manhattan and very windy as well. So I apologize in advance for any wind noise. All right, it looks like we are good to get started. Well, good evening, everybody. Welcome back to Walks and Wall Street. Today is January 4th, 2024, and it is a Thursday. It is a short week, right? Monday was New Year's Day. This week absolutely flew by. So tomorrow, we made it to the end of the week. It is Friday, but we do have to look out for some interesting weather patterns over the weekend. Now, currently I've been watching the storm. It looks like it's just going to be rain, which is actually a bummer because it's going to be probably torrential downpour, like right on the borderline of snow. It's going to be very wet, windy, nasty. So to be determined if we're going to do a stream Saturday. So TBD on that. We'll quickly talk about the markets a little bit. If you look at the S&P 500, currently trading at 4688. The S&P was down about 16 points today, about flat, although it was very volatile intraday, right? Again, to check up on that 50-day moving average for the S&P, right, coming in right at around 4531. So we're still about 5 percentage points away from the 50-day. This is now we have 4 days in a row of a correction, which I think is good going into the new year. It's very important, though, to watch the reaction around the major moving averages, okay? Usually what happens, right, assuming this is the start of a new bull, you usually have the leaders come flying out and you get this very aggressive and at some points egregious extension over the major moving averages, particularly the 50-day and the 200. The indices tend to pull back, but it's very important to watch the reaction around the 50-day. If we come down, at like 6 o'clock on a clock face, and slice through the 50-day to the downside on high volume, that is no good. You should probably pare back exposure. But if you start to see the market trading sideways, volume coming in on the buy side around the 50, that could be a good entry point for those who missed the initial leg up. We'll go to the NDX, the NASDAQ 100. NASDAQ was down about 86 points. Now again, this isn't the composite. This is the NASDAQ 100, trading at 16,282. Again, we, for a very brief time, broke out in a new all-time high record territory. We've now come back into that base, looking to test the 50-day, but market is looking good so far. I want to shift gears, though, away from the United States, and I want to turn our attention to India first. So let me go ahead and pull this up. We'll pull up the Nifty 50, which is the main equity indice for India. I think this is something we need to be paying very close attention to, not only going throughout 2024, but throughout the next decade. I mean, India has been absolutely outperforming. And if you look at the major correction that we went through here in the United States, India really didn't have that. Had it to a less degree of severity, but the Indian equity markets are already up and out, running to new all-time record highs. So the ticker symbol on that is the NIFTY for the Nifty 50, or I believe it's INDA for the BlackRock iShares India ETF, which is sort of an ETF that will grant you broad exposure to Indian equities. I'm very bullish on India. I wrote a piece about why I think India is set to benefit in a major way from this rotation out, or I should say diversification away from China. Let me just, I think COVID, right, the C-19 virus, really taught everybody the importance of diversification away from mainland China, from semiconductor production, biotech, pretty much everything, right? China is the workshop of the world, as they call that. I think going throughout 2024, you're going to see more infrastructure, manufacturing capacity being constructed throughout Asia, not in China, particularly in India, Japan, Korea, and who is also set to benefit, I believe, is the US, Canada, and Mexico. So we'll talk about that a little bit later. We'll go over to Japan. Let me just pull it up here. Now, this is something that we need to be paying very, very close attention to. I'm actually going to take you guys behind the desk here. I think the Japanese economy is going to be making a major comeback in a major way, and I think we could even potentially be headed towards a golden age in Japan. I want to show you guys this. Let me know if you could see it in the chat. This is the historical chart of the Japanese stock market going all the way back to 1949. Now, Japan tends to have these incredible super cycles in the Japanese economy, and then we've topped in January of 1990. So 1989 into 1990, we've topped in the Japanese stock market, and we've gone down to sideways ever since. But ever since the 2008 financial crisis, we've been building out the right side of this massive base in Japan. And I think what's going to take us into new all-time record highs and beyond, way beyond all-time record highs for Japan, is going to be this global push of diversification away from China in terms of manufacturing, but more importantly in terms of semiconductor production and R&D in general. So yeah, we'll talk about that, and then we'll talk about Mexico in another stream. Really quick, everybody, really quick. I have a quick update. Go ahead and check your email, okay? At around 7:30 p.m. Eastern time today, I sent everybody, all of our Walks in Wall Street subscribers, the first issue of our free investing newsletter, the Behind the Street newsletter. So if you have not received that, make sure you look in your spam folder, just look in your email, make sure you got it, because I think this is a very important piece here to start us off for the new year. Now, if you want to sign up and read it for free, just go ahead and scan the QR code on your screen. Go ahead and punch in your email, and you will be signed up to receive the Behind the Street newsletter. We covered a lot. This was a more lengthy piece, but I thought it was necessary. I started the newsletter off with a little bit of motivation, but we did a quick recap of where markets ended in 2023. Then we talked about historical performance of the S&P 500 during election years. This is a critical piece of the newsletter you have got to read. Then we talked about the Institute for Supply Management Manufacturing PMIs. This is the most important piece of the essay, okay? The potential return of private equity. We talked about KKR, we talked about Blackstone, and then we talked about Goldman Sachs for a potential revitalization in the public markets as it relates to IPOs, initial public offerings, and SPACs. We did a little bit of a compare and contrast between the duration and time of this bear market to 2008. And then we did a deep dive into India, Japan, and a little bit of a bear thesis on China, which is interesting for me because I've totally changed my tune on China over the years. Yeah, anyway, so go ahead, check your email for that. And again, if you want to receive all of our equity research for free, okay, we send it out every other Thursday after the closing bell. So go ahead, scan the QR code, punch in your email, and I'm gonna go ahead and close up my laptop. I'll say hello to everybody in the chat, and we will get the stream started. Thank you all for joining. Late stream too, 9:30. I apologize for being late. I had to get dinner though. All right, team, and we are off. Let me see. And for those of you who cannot scan the QR code, just type !news, NEWS in the chat, and it'll drop the link to our Substack. All right, the most important part of the stream is right now. I see our good friend Gary Carpenter. What's up, Gary? Unij23, welcome. Brent Thompson is here. This is hi from Ontario. Hello, Brent. Michelle Fink, Jean, good to see you, Jean. Sharon, what's going on? Troy Atman, CJ is here. Thanks so much. Sunshine After Rain, Carson, what's going on? Hey, everything in Miami. I will be in Miami next week. I'm gonna have to, I'll send you a text. Because I'm going to be in the 14th through the 20th. I will be down in South Florida. Hopefully we can meet up if you're down there at that time. Steph UF, what is going on? Sebastian, Stephen Bate, Doga is here. Derek Dulce, Gene 1649. Yeah, we got a full house here tonight early. Richard Vogel, as always, what's up? Seaworks. All right, everybody, a quick forewarning. It's very chilly out here in New York City, very cold. Was not expecting it to be this cold, so we are bundled up. But unfortunately, it is also very windy, so I apologize in advance for any of the wind noise. We still have to buy our microphone. So I think what we're gonna do is go over to Madison Avenue, because usually Madison is, for whatever reason, one of the least windy avenues. If you walk directly down 57th Street, Billionaires Row, that's like a complete wind tunnel over there. So yeah, apologize in advance. Troy Atman says, Tom, it's 52 degrees here in Tampa, which is freezing for us Floridians. That's a little crazy, 52 degrees in Tampa, Florida. For all of our Floridians out there, you know, I was talking to one of my buddies who lives in North Beach, Miami, and he was telling me so far this year, right? So far this year in South Florida, it has been unusually cold. Apparently, over the last month in South Florida, it's only been, you know, high of mid-70s throughout the day, and at night, you know, it can get down into the low 60s. So it's been cold. It's been cold for Florida, right? If anything, it's been a very mild winter so far here in New York City. But hopefully, Saturday's snowstorm will actually be a snowstorm and not, you know, freezing rain. Anyway, Lance, what's going on? It's good to see you. DA, welcome. We're gonna head towards Grand Central Station tonight. We'll try to take as many pit stops as we can inside. But you'll notice a clear contrast tonight, especially as it relates to the other streams we've done before New Year's. The city has all but cleared out, in my opinion. I was walking around Midtown Manhattan today, and pretty dead, right? Compared to, you know, the crazy tourist mobs of before the New Year. So I think things are going to settle down here in the city. So if you are visiting New York, you know, maybe take the other side of that trade and actually plan your visit soon, right? Because you'll be able to enjoy the city with pretty much no people here, which is great. We're currently standing directly outside the Jefferies building. This is a major financial institution and investment bank. One of my favorite office buildings in the city, right here at Jefferies. Lance has grabbed some hot coffee. I'm gonna have to do that after the stream, 100%. Ket's 42, so sounds like perfect weather to me. Yeah, I mean 77 degrees, but for down there it's a little bit chilly. You know, you can't really go to the beach, can't go swimming. Troy Atman says, yes, it has. We actually had a winter this year, which never typically happens. It's been cold since November. Yeah, I mean, Troy, I was down probably about a month ago now. Was the last time I was in Miami. And yeah, it was like mild. It was mild, which for most people, that's actually a very positive thing. Most people aren't crazy like me, right? And they don't like extreme heat and humidity. I actually love the extreme heat and humidity. So maybe this will actually attract more people to South Florida. We were talking about, you know, migration trends in real estate and how a lot of people from New York, California, have migrated to the state of Florida, right? For obvious reasons, right? Business reasons, better tax environment, business friendly, things like that. But the number one objection that I always get for South Florida in particular is that it's too humid. It's like a swamp. People tell me exactly that. They're like, I can't live in a swamp. It's way too hot and humid and it's unlivable in the summer. And I get that. I do get that. I like that weather, but now that it's getting a little bit more mild, I mean, who knows? Maybe more people will be susceptible to moving down there. I told you a quick story of one of my buddies who lives in California. You know, his political opinions are about as conservative as you could get, but he always says, I will never, ever move out of the state of California ever. That's what he says. He's like, there's no circumstance, there's no, even if they tax me 90% of my income, I will never move out of the state of California, because apparently where he lives, it's 77 degrees, 75, sunny every single day, quite literally the most perfect weather, which I understand. So, you know, climate does have definitely a lot to do with it, right? Hey, TK Porsche says there's a reason there wasn't a 14th colony. Georgia was as far south as thought habitable. Yeah, it is a little bit humid, but I like that. The more humid, the better. That's why I actually love New York City. I love New York City in August. I'm convinced that there's no better place to be than New York City during the month of August, because it's hot every single day. It's really humid. It actually does get humid here during the summer. And there's so many amazing things to do. There's so many activities to do. Enjoy the city, Central Park, South Street Seaport, take the train, go out to Jones Beach. I mean, there's just so many things you could do in the summer in the city. It's awesome. Hey, Ed Dunkel, what's up, Ed? This is Santa Barbara, close, very close. I think the only thing that would ever get me to move to California is if I was someplace in San Diego. I think San Diego, California is where the, isn't that where the main Navy SEALs training is? Or the headquarters? I don't know what it's called. I don't have a military background. But I believe that's where they do a lot of their training, right? Anyway. Hey, check the logic. What's up? Mary says, I love California too. Mimi says, hey Tom, just got back from vacation, California and Hawaii, and now back to work. Loved San Diego, very cool. Hopefully you had a fantastic vacation. I'm looking forward to getting away from the city a little bit as well. Troy Atman says, yes, San Diego is where they train. Yeah, my buddy, my good friend from college, is a TAC-P in the Air Force. I guess that's the one of the Special Forces divisions of the Air Force. I believe that's the acronym TACP, TACP, I think. And he was telling me he was training with the Navy SEALs there last year, and it was a whole lot of fun. I could only imagine. All right, this is the New York Palace here on East 51st Street. And we are standing right behind the beautiful St. Patrick's Cathedral, and you can see all the way to 30 Rockefeller Center. Kenny says on CNBC, they said lots of people that moved to Florida didn't give up their places in New York City, they just changed residency. Kenny, that is spot on. That's 1,000% correct. Now, I think you may be referring to the CNBC interview that happened yesterday with Noble Black. And you're correct. So what a lot of people are doing, particularly wealthy New Yorkers, they're not dumping their properties in New York City. They're essentially just changing their tax residency, right? So they're buying places in the state of Florida, and not necessarily just the state of Florida, right? There's lots of other states where people are going. Tennessee, Georgia, Texas has attracted a lot of people. And I believe if you stay, 6 months and a few days, right, in the state of Florida, you're eligible for, all the tax benefits and everything like that. So if anything, it's just increased the amount of snowbirds that there are, right? But yeah, for anybody who hasn't seen that was a really good interview. Now, Noble Black is one of the top brokers here at Douglas Elliman. His desk is actually a few desks down from ours on the 6th floor of Madison Avenue, 575 Madison. And he had a monumental sale right at the end of the year. He sold the top floor, or the 83rd floor, at $157. It was 6,500 square feet. I believe the list price was $34 million. It went under contract, sold and closed for $31 million. Not bad. The views are fantastic from up there, really incredible. Hey, NAV 407, what's up? Hey, Tom. So I was reading a Wall Street Journal article. I believe the most expensive piece of real estate sold last year was that major estate in Connecticut. And I think the second most expensive piece of real estate sold was to Jay-Z and Beyonce in California. I was looking at some of the pictures, it's insane. I forget the name of the massive estate that was sold in Connecticut, but that thing is like insane. It's almost as if, if you buy a property of that size, you probably need to employ a full-time staff just to do the maintenance, the landscaping, and take care of the property. I mean, I don't understand how you can manage, even just to take care of that whole house yourself. Even if you have part-time staff, you need like a full-time staff. This is 270 Park right here. Hey, Dinesh says, hey Tom, glad to be a part of the stream tonight. How are you? Doing good, a little cold. It's a little bit cold out. That's why we're gonna head into Grand Central Station. Let's, maybe we'll avoid the scaffolding maze here. We'll wait for this light. Hey Scott, what's up Scott? Good to see you. Someone says New York City will check security cameras to find tax cheats. Can't win. Checking security cameras? Well, it's very, very difficult to kind of evade taxes, particularly in this day and age. Essentially the IRS will really target the very, very ultra wealthy people, right? Because if you look at the percentage of tax income it comes from a very, very select few people. That's why when, for example, when Citadel's Ken Griffin left the state of Illinois, just that one guy alone made a huge impact to tax revenues in the state of Illinois, right, and the city of Chicago. So the IRS really tends to hyper-focus on those ultra-high net worth individuals. They're very, very seldom will they come after, a person with like, under $10 million in assets. But to your point, it's very, very difficult to kind of, in my view, to be a tax cheat nowadays, because let's say if you claim, residency in the state of Texas, right, but you're spending the majority of your time in California and you're not paying California state income tax, well, they could just look at your credit card statements, right? Hey, why are you, why for the majority of the year was your credit card being charged in California and not, Texas, right? There's so many things that they could do. It's very, very difficult. Very difficult. And for the most part, right, for the most part, this may be a little bit of a controversial take, by the way, as we're standing right under the beautiful 270 Park Avenue. I think if you're early on in your career, right? Oh, look at that guy welding all the way up there. My opinion is this. If you're very, very early on in your career, I would say under 35, I wouldn't overly hyper focus on trying to mitigate your tax bill right away, right? I think the goal is to get around the right people and to build your network as much as possible. So if you're a 20-year-old kid, right, 22-year-old kid, getting a job in New York City right out of college, and you're paying all these high taxes, I think that's worth it, right? I think that's worth it because the best, brightest, smartest people that are usually the most motivated and driven tend to be in major cities, right? I know it's a generalization, but usually, particularly if you're in the investment banking business or the technology business or the real estate business, it's kind of like you got to pay to play, right? All of the major players are here. We're right on Park Avenue. This is where many of the hedge funds, family offices, investment banks, financial institutions, they're all right here, right? So I think it's more important, and this is just my personal opinion, it's more important to maximize tax savings once you've accumulated a very, very stable and solid network, career, and assets. Then later in life, focus on the tax prioritization, right? In my opinion. Hey, Dennis, thank you so much for your 5 CAD donation. It says, isn't any tax savings in Florida offset by crazy insurance rates and HOA fees? 300% plus increase. Snowbirds can't afford Florida anymore, only for the rich, question mark. I mean, there's actually some truth to that. Now, I would say that's a little bit of a generalization. Ooh, the wind is brutal here. This is the Roosevelt Hotel. This is one of the main migrant centers in New York City. Let me just cross, get out of the wind. But yes, one of the major problems, and this isn't just exclusive to Florida though, by the way. This problem is actually going on in all major cities, including New York, California, well, I would say places like LA, San Diego, any place that's very susceptible to wildfires, flooding, hurricanes. Insurance is going up astronomically. So that is true. So I wouldn't say it's totally offset by it, but it is an issue. It definitely is an issue. I mean, if you go to South Shore, Long Island, right? which is right here in Nassau County, Suffolk County. In towns like Oceanside, Island Park, Long Beach, you know, in the Massapequa Shores, you're gonna get those crazy flood insurance rates too, right? Red Hook, Brooklyn, you know, all the places that flooded like mad during Hurricane Sandy, those insurance rates are going up. But in downtown Miami, what is true is a lot of those luxury high rises or condos, the insurance policies on the whole buildings, in some cases have gone up over 100% a year. So that gets passed on to the tenants. Your monthly maintenance, your HOA goes up, and it's a problem. So for some context, I own a small property down there, right, in the grand scheme of things. And it's a 3-bedroom, 2-bathroom home. And I believe I pay like $4,500 a year for my insurance, for my homeowner's insurance. That's high, right? That's high. The way I view that is it's the price of living in paradise, honestly. You know, what can you do? Hey, Fun Feeds, what's up? Everybody, this is the Yale Club here. Everything in Miami is not true. HOA fees and insurance are high everywhere. Yeah, I mean, look, if you, in desirable places, right, generally speaking, the insurance and the taxes are high, right? You ever try to buy a house on Long Island, New York? You ever try to buy a house near the Jersey Shore? Taxes are high, insurance is high. You know, it's not uncommon for property taxes on a $700,000 home on Long Island to be, you know, $16,000, $17,000, even $20,000. That's not uncommon, right? I'm not too sure about California. I don't really know how much it is in California. Hey, Peter says, are there areas you won't walk at night due to safety concerns? Your camera may also be a target. Not really. I just walk around the city and hang out. I don't really think about it. It's not like I'm gonna, you know, take the train to Brownsville, Brooklyn at 11 a.m. and, you know, walk around in the freezing cold out there. I walk around by my office and have a good time. That's really about it. All right, this is the beautiful One Vanderbilt. Look at that. And at the very top, you have the American Express Centurion Lounge, and you also have the observation deck summit at One Vanderbilt. Hey, Tariq Khan says, yeah, that means only 33% of folks in New York City need to take out a mortgage. We've been seeing a lot of cash buyers, tons and tons of cash buyers in New York City. It's essentially like becoming a rich person's playground. Hey, Hang with Mark Mamas here says, Happy New Year, Tom. Good to see you. Thanks so much. 007 says, that's expensive, dude. Why? Insurance, fraudulent claims. Well, in South Florida, there was a big, I don't know all about it, but what has a lot to do with it was a lot of the roofing frauds and scandals down there. But yeah, I mean, my homeowner's insurance policy is around $4,500 a year. And my property taxes are right around $7,500 a year. So what can you do? I've sort of, the way I think about it, and it's kind of like just giving up on it. There's only so much you can do because you're not going to change it. You're not going to get lower rates. It's just not going to happen. The property taxes are not going to go down. The insurance rates are not going to go down. It's just not going to happen. It's a non-starter, right? So my view is I can't complain about it. I just got to make more money. That's it. I mean, there's really only one equation to that. You know, I could kick and scream, you know, the county's not going to charge me less in property taxes. I can guarantee you that. I just got to do it. Got to do whatever you got to do. NAV407 says, what have you shown us that downtown New York is very safe? Yeah, I love it here. For sure. Hey, Ryan Beck says, nice how property taxes are getting nutty here. Slightly offset by no state income tax. Very true. Yeah, that's right. Ryan Beck is in Texas. And I think we can also boil the tax problem down to basic, supply and demand, right? The more people that move into an area or a location. I just got to take a pit stop in Grand Central to warm up a little bit. But generally speaking, the more people that move into a neighborhood, right, or a city, the more buying is going to push prices up. And when prices are pushed up, the assessment values are pushed up, right? That's why, we all know that one person that has lived in a neighborhood since, the 50s, and their tax bill's like $850, like $1,000, right, a year. That's because their assessment values on their homes for their tax assessment is very low. But when that home is sold to somebody else, it reassesses at the higher amount, and your property taxes go through the roof, right? So I was thinking about this, and homeowners, when you buy a house, right, everybody wants their home, particularly if you're not using it as an investment. If you're just buying a single family home and you're not renting it out and it's not a cash flowing piece of property, it's actually in your best interest not to have the valuation of your home go up in the first 10 years of you buying it. But if you think about it, if anything, you kind of want valuations to stay, low, so you don't have to have your overhead costs go up, right? Yeah, it may feel good to go on Zillow and look at your Zestimate and it's going through the roof. But when you get the tax bill at the end of the year, your tax bill is also going to go through the roof, right? Assuming you don't have homestead or any type of deduction. Hey, TK Porsche is California Prop 13 limits assessed values to a maximum of 2% annual increase upon transfer of the sale. Property is reassessed to market value. Thank you so much for that, TK Porsche.
Don't fall for it. Watch the gap getting on and off your train.
I know, Scott says come to Wisconsin, we'll show you what it's called. Yeah, I'm not, I'll take you up on that in the summer, I promise. Someone says, just a theory, property taxes are going up because states and cities have to pay higher interest on their bonds. That could be one of the points, right? But if you look at the percent increase, particularly since the housing boom in COVID, these property tax bills, have gone up, over 50%. And I had a theory that a lot of people who were, let me just get away from this guy. I have a theory that a lot of people that were moving to the state of Texas from other states and, buying a house, because you can get a nice size house in Texas for like $350 and it's huge, right? Over 2,500 square feet. But it comes with very hefty property tax bills. And I don't think a lot of people were prepared for that, in my view, but.
Wasn't a good perk.
Hey, Anthony Torres. Hello, I hope you're having a great night. Thank you, Anthony. Ryan Beck says, how's the action been over at Conover, Tom? The action's been good and it's been picking up a little bit. We closed just before the end of the year. We closed on 2 of the townhouses. So Townhouse H and Townhouse B is now sold and closed. And hopefully, fingers crossed, Unit 2B will go into contract here very, very soon. It's strange because I've noticed I've been doing more showings in Brooklyn than I have at any of the listings we have in Manhattan. I don't know why that is. Maybe it's people just want more space. They want to venture out of the city. At least that's kind of the vibe I'm getting. But this Sunday, or I should say the day after, Monday or Tuesday, we're going to list Penthouse 3A at the Conover. And hopefully I'll be able to get some video footage of that to show you guys. But that's a cool property. Very cool property. We have a sauna on the roof and a cold plunge on the roof. Hey, Brent Thompson says Cash Jordan says 2.7 million in New York now live in poverty. I wouldn't doubt that. I wouldn't really doubt those numbers, right? Cost of living is insanely high. Particularly now, I would say that numbers probably increase the amount of people living in poverty because of the migrant situation, right? There's a lot of migrants that have came here. I think over 100,000 now, and they don't have any working papers, so they can't work. So I would assume they would automatically qualify as living in poverty, right? If you can't work, feed yourself, you know, that's essentially you live in poverty. Which is really sad to think about, all the craziness that's going on. I don't want to get too political there, but I think that that whole thing is a self-inflicted wound. And I really believe it's not even the migrants' fault, right? Because our government has told these people to come here, right? If I was from, you know, Venezuela and I was starving and I wanted to come to America for a better life, and the government is saying, if you come here, we're going to give you free hotel rooms, we're going to give you free food, we're going to put your kids in school for free, I would be the first one up to go, right? The problem is our politicians virtue signaled that to win votes, right? They actually weren't being genuine about it because they knew this would never work. So what happens is everybody comes, right? If you tell people to come, we're going to give you free stuff, they will come. And then when they get here, we don't have enough space for them. The hotels are overflowing. But then the migrants are like, wait, you said if we come, we'll get all of this stuff, we'll get housing. And now a lot of people are thrown out of the housing. So I actually don't blame them. I have a very unique take on it. So that's sort of my take. Greg says they can work, just not legally. Yeah, so I mean, you can't work.
Maybe I'll come to dinner with April. Oh yeah, do you want to?
All right, everybody, we are now looking at the beautiful Chrysler building right here on Lexington Avenue. Look at that. Beautiful shot of the Chrysler building here. Hey, Uncle David says, have you taken the Roosevelt Island tram? That would make a cool live stream. You know, I haven't. I think that's one of the things I'm going to do this year, is get on the Roosevelt Island trolley. I've actually never taken it in my life. And my place is not too far away from it. My place is on 61st Street. It looks cool. Maybe we'll have to do that. Maybe on a day that's not super crazy, but yeah, I think that would be an awesome stream. The views are incredible over the East River. Another thing that I want to do, and I keep forgetting what it's called. Maybe we'll try to head over that way now, assuming that it's not super windy, but the city did a really good job with building this elevated sort of highline project on the east side. Now, of course, we know by Chelsea Piers, or not by Chelsea Piers, Chelsea Market, going all the way up to the Hudson Yards, you have this beautiful highline structure, which we've done numerous live streams over. They did something similar on the East River. It's like an elevated park. There's bike lanes, there's a path to walk. They did a really good job. I'm not sure if the entire thing is open just yet, but when it's open, we will definitely be going over there. You know, one thing that I wanted to, run by the group here is, and we sort of talked about this at the very beginning of the live stream, is looking out, sort of switching gears here, looking out into the next decade, right? 2024 and beyond. You always hear this narrative, right? If you turn on CNBC, if you turn on Fox Business, Bloomberg, pretty much all of the main financial channels, there's actually been a lot of major books written about this. It's this increasing fear almost like this propaganda style fear that China is going to overtake the United States as the sole world #1 superpower, right? That there's going to be a new currency that's going to dethrone the United States dollar as the world reserve currency, and China is going to overtake us in terms of military power and technologically. Now, I couldn't be more in disagreement with that take. Now, for the following reasons, and we sort of wrote about this a little bit in the newsletter that I just sent out to everybody. So if you didn't get the newsletter yet, go ahead and check your email. But I want you to go ahead and take a look at some of the global equity indices. Go ahead and look in Asia specifically, okay? So go ahead and look at the Hang Seng Index, right, which is the Chinese equity market, essentially. Go ahead and take a look at the Nifty 50, which is India, right, the Indian stock market. And then go ahead and take a look at the Kospi, right, the Korean Kospi. And then lastly, take a look at the Japanese equity indices. And you'll notice a very, very stark correlation and contrast. You have India firing on all cylinders, right? Breaking new all-time record highs again. Barely went through a correction. You see the Japanese stock market retesting all-time record highs that it set back in 1989, right, to 1990. The Japanese stock market put in a multi-generational top back in the latter half of 1989. Now we're sort of starting to build out the right side of that base, and Korea is doing very well too. And I think that the number one thing that's driving this, in my view, is the following, and I sort of want your feedback and input on this. COVID, right, 2020 really taught and showed not only the global world on a global scale in terms of nation states, but global companies, right, and business leaders, that there is no way in hell ever again that we are going to let our supply chains be totally dependent on China, right? We've still had supply chain backlogs for almost 3 years, right? We're just sort of getting out of that now. The supply chain is only just starting to return to normal right now, right? 4 years later. So if you've been noticing this, right, if you've ever been on any of the earnings calls of some of the major companies, particularly Apple, for example, you know, Tim Cook is moving his production capacity for iPad out of China and giving it to India. Look at semiconductor manufacturing. It's all going to India. It's all coming back to the United States, Canada, Mexico, Korea, Japan. So the market, and we talk about the market, how one of the best leading economic indicators is stock prices, right? Because stocks price in earnings 6 months into the future. So you have the Chinese stock market, the Hang Seng, hitting 52-week lows, and we're now below where it was during COVID. And every other major equity index is going up pretty much 12 o'clock on a clock face. So I think that this next decade in Asia is going to be dominated by India, is going to be dominated by Japan, and lastly is going to be dominated by Korea. Any qualms about that? Any disagreements, agreements? We wrote a piece about this, so if you want to check it out, if you go ahead and scan the QR code on your screen, I literally just sent this article out to everybody 2 hours ago. And if you punch in your email, every other Thursday after the market closes, we send out our free equity research piece to everybody who subscribe to the Walks on Wall Street channel. So go check it out. Scan the QR code, punch in your email. You could also listen to the audio version of the newsletter if you don't want to read it. And at the very bottom, we have a little bit of a property tour of one of our listings in Gramercy. Hey, Super White Shadow says Taiwan, question mark. Yeah, I mean, if you want to talk about Taiwan, that's a major semiconductor powerhouse there. Patricia Johnson says many manufacturers have left China, agreed. Dr. Longus says sounds reasonable, Tom. If India plays it right, they could make some incredible gains the next decade. I couldn't agree with you more. I think the number one spot in terms of economic powerhouse is going to be US. Well, we are, but it's going to continue to be US. And number two is going to be India. I am very, very optimistic on the Indian economy, mainly because they have a very, very robust young population and a growing middle class. And I'm not really one to invest in emerging markets, but the emerging markets that will do well generally are emerging markets with a younger population and a healthy middle class. It's very, very difficult to have a functioning economy without a healthy middle class. Hey, Lou72 is here. Good to see you. Positive Princess, good to see you. Thanks for joining us. Let me get this out of the way. We're heading over to the east side of Manhattan now. Alfonso S is Japan and Korea just like China facing major demographic problems though. India and the US still are healthy on demographics. So that is true, but have you been noticing what Japan is doing about that? Now, historically, Japan and Korea specifically, have been extremely homogenous societies. Meaning they don't like immigration, right? Not to get political, but it's just historically been true. Foreigners have historically not been very welcome in Japan. Now they are, right? The Japanese government is actually opening up, I wouldn't say opening up the floodgates, but is encouraging immigration because of the population crisis. The population crisis is worse in Korea. But I think immigration could fix a lot of those problems. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every night starting at 8:30. Super White Shadow says, any fear from BRICS? I have absolutely zero fear from BRICS. Maybe next week I'll write a piece about exactly why, but I have absolutely zero fear from BRICS. Now, my opinions don't mean I'm right, by the way, right? I'm just giving my opinion just like all of you are giving your opinions, but if you look at the market, just follow fund flows too. I was watching a really compelling interview with Larry Fink. Now, if you don't know who Larry Fink is, he is the CEO of BlackRock. And he said the number one country of interest from investors currently right now is Japan, right? There's so much happening in Japan now. And Japan still has this narrative of, Japan is uninvestable, massive debt crisis, all these global macro factors, which we get. I get that. But, think about if just 10% of what all of these analysts are saying about artificial intelligence is true, right? We always get hammered with this AI, right? It's really been in the headlines. Usually it's about a fraction of what the experts predict, right? They usually overshoot and hype everything up. But if it's 10% of what they promise, semiconductors, this is sort of the way I think about it. I'll give you an analogy, right? Now, during the gold rush, right? Everybody came to the gold rush in search of gold. Now, the majority of people didn't make a fortune in the gold rush mining gold, right? There were a few people who did. There was people who did, but there was also a lot of people who lost money and didn't strike gold. What you want to be is the person at the bottom of the mountain selling the pickaxes and the shovels to the miners, right, that are coming to California for the gold rush. You want to be the person at the bottom of the mountain handing out shovels, pickaxes, and charging people for it. That's kind of how I feel about semiconductors. There's going to be so many startups, there's going to be so many businesses that are pure play AI businesses, and they are all going to be propelled by chips, by semiconductors. So even if they fail and go under, right, the semiconductor industry is going to continue to boom. At least it should. So look at what parts of the world is very, very heavy on the development. Oh man, that's brutal wind. On the development and manufacturing of semiconductors. Hey, Flat Smack says it calls itself intelligent, but it's actually artificial stupidity and it's pure evil. Stupid and evil is a bad combo, says Flat Smack. That's an interesting take. Look, I respect the take. I disagree with it, but I respect that take. I respect that take. Hey, Lisette, what's up? Yeah, Troy Atmans is selling shovels. Be Peaceful is here, welcome. Just trying to read all the comments I lost or missed. Yeah, Flat Smack, it's good to see you too. Wishing you and your family a happy new year. Hopefully you had a good holiday season. Thanks for joining the streams. Now, we talked about Japan, we talked about India, but you know what? A lot of people, and we're going to touch on immigration a little bit because it's important. We will try not to get into the politics of it all, but I want everybody to go, and I think I reposted this today on Twitter. So the CEO of a company called Box, ticker symbol BOX, his name is Aaron Levy. He's a really good guy. I actually met him in person once. I like him. Now, he tweeted something very interesting today about the amount of H-1B visa applicants in the United States. I want everybody to take a look at that chart. So if you go to my Twitter, if you follow @WalksWallStreet on Twitter, take a look at that graphic that he posted. Again, the CEO of Box, Aaron Levy. And Elon Musk actually retweeted this. Because right now, if anybody's familiar with the immigration system, and maybe we have some foreigners watching the stream who maybe are in process of trying to obtain an H-1B visa, it is very difficult. So we have now reached all-time record high levels of highly qualified, highly educated, and highly motivated people from all over the world that are going through the application process to get an H-1B visa, right? Now, H-1B visa applicants are, almost all of them have some sort of an advanced degree, right? Bachelor's, master's, and in most cases, you're more likely to get your H-1B visa approved or selected, right, in the lottery, should you have a higher or advanced degree in a particular field that is highly in demand, like computer science, engineering, biomedical engineering, things like that. And still, right, I have friends who, they're on year 3 of not getting their H-1B visa approved, even though their companies are sponsoring them to come here and work. However, on the flip side, right, we have the southern border just wide open for any old person just to charge through, right? So the sort of comparison that I'm trying to make when people say that, you know, the United States is going to lose its status as the world's superpower, the number one, how many people are banging down the door to get into China right now? I mean, ask yourself that question, right? How many of your friends, family, colleagues, loved ones do you know that's applying for a visa to say, you know what, I want to go work at a company in mainland China. This is what I really want to do. Or are they willing to wait 3 years, 4 years, 5 years just to get selected in the H-1B visa lottery, right? So America continues to be this one-way street. But what I am concerned about, right, it's not all sunshine and rainbows. What I am concerned about is other countries like Canada are actually capitalizing on our incompetence. It's actually a lot easier to get a visa to go work in Canada in a major city than it is to get a visa to work in the United States in a major company, right? So you're starting to see some of the best and brightest from all over the world, you know, head north and go to Canada. Now, I like Canada. Many of you watching this stream are from Canada, but I'm also an American and I'm a competitive guy, and I want those people here. So kudos to Canada, right, for being a little bit more competent than we are. So I think if I was in charge, I would sort of flip that process, right? I would say, look, we have all of these people who want to come here from all different parts of the world, from Korea, from, you know, India, from Pakistan, all over, right? And they're already educated, they're highly motivated, they have American values. Why don't we let these people in? What's the wait? Why don't we approve the visa to let these people in? Right? These are already highly qualified candidates, and I think it's a little unfair, right, to you know, kind of have the floodgates open at the southern border that encourages human trafficking, sex trafficking, but when the people that are trying to do it the right way, right, that are coming here from all over the world, you know, we give them a hard time. I think that is the number one drawdown and negative of the United States that could really put us in a bad spot. I don't know, any thoughts on that? I mean, you got to look at that chart. I mean, the backlog of H-1B visa applicants has just gone off on like a rocket ship, right? The amount of highly educated, motivated people wanting to work in America is at an all-time high, while we are accepting fewer and fewer people into the United States. Kind of interesting. Let's head back towards Bryant Park here for a bit. Hey, Vinny is here. It says, hey Tom, a great book to read on China is The 100-Year Marathon by Michael Pillsbury. Highly recommended. Thank you for that recommendation. I will be reading that. Let me go ahead and take a screenshot of that, actually. Hey, Ethan G, what's up? Good to see you. Hey, Mark, this is Tom. I grew up in Canada and moved to the United States 22 years ago. Well, thanks so much for being here. Scott says GDP growth depends on a consistently growing workforce. Immigration offsets low fertility in the United States. Steph UF, what's up? All right, let's head up to Library Way. And we'll head over. This is 300 Madison Avenue. This is PwC. Ooh, look at that. Somebody blew out all the windows here. I think that's glass. Or is that rock salt, actually? That's how you could tell I've been in the city for quite some time. You automatically default to say, yeah, somebody broke the windows here. But anyway, if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every single day starting at 8:30 p.m. Dr. Longus says, Tom, have you watched the movie Moneyball with Brad Pitt? I have not. I'll check it out though. I'm not a big movie guy. I very, very seldom watch movies. American Andre says, I would love to get an H-1B visa to work in America because life in Jamaica is hard. Oh, come on over, my friend. All right, this is looking directly at the Steven Schwartzman building here. Now, Steven Schwartzman is the CEO and founder of private equity giant Blackstone. And over the last 2 years, not only the private equity market, but also the public markets in terms of the IPO, initial public offering market, has really been totally shut down and turned off. And there's a reason for that, which we'll talk about in a moment. But first, look at the architecture on the New York Public Library. It's pretty incredible, isn't it? It's an amazing contrast between the Steven Schwartzman building and Salesforce Tower, Bank of America Tower, and the H&M building. It's kind of wild. But 2021 set an absolute record on Wall Street for deal flow or deal activity. There was over 1,000 IPOs or initial public offerings that took place in 2021. But in 2022, does anybody want to take a guess at how many IPOs or companies went public in the United States in 2022? Does anybody want to take a guess? So 2021, once again, you had over 1,000. 2022 just completely fell off a cliff. If anybody wants to take a guess, as we cross the street here at 5th Avenue. This is looking northbound on 5th. Patricia Johnson says 50. Not a bad guess. Vinny says 200. That's almost dead on, actually. Tariq says 178. Hang with Mark Mom says 180. Stephen Bates says 80. Hang with Mark Mom, I think you were the closest. I believe there were 181 IPOs in 2022, down from over 1,000. That's over an 85% decrease. And that's mainly because in 2021, right, you had all of this pandemic stimulus. You had artificially low interest rates, right? And deal flow on Wall Street absolutely exploded and ballooned. But as we transitioned monetary policy, right, away from quantitative easing to quantitative tightening, money got more expensive and the capital markets dried up. Almost no companies were going public, right? All of the SPAC, special purpose acquisition nonsense, blew up, and private equity completely went away. Now, why am I mentioning this? Well, number one, we're standing outside of the Steven Schwartzman building, one of the most famous names in private equity, Steven Schwartzman, right, CEO and founder of Blackstone. The market, and we wrote about this in the Behind the Street newsletter that I just emailed to everybody 2 hours ago. So go ahead and check your email if you didn't receive the newsletter. But one of the things I wrote about was 3 stocks in particular, to me, are forecasting a major return to a healthy IPO market, and number two, a healthy private equity market, so more deals being done. So go ahead and take a look at, and I got to put you down here because I have to plug in my phone. It's cold, the phone's gonna die. But go ahead and take a look at KKR, right? Another private equity giant. Go ahead and take a look at Blackstone, and then take a look at Goldman Sachs stock and tell me what you see, and then we'll talk about it here in a minute. All right, we should be good. Yeah, all right, if you want to see a visual of what I'm talking about, if you scan the QR code on your screen and punch in your email, you can read our free financial newsletter that I just emailed out to everybody about 2 hours ago. Now, take a look at KKR, take a look at Blackstone, and take a look at Goldman Sachs. You'll notice how each one of those stocks started to roll over in the latter half of 2021, just 6 months before the whole entire IPO and private equity market essentially went dormant, right? So again, markets tend to forecast, look ahead 6 months. Now, KKR is near trading back to its all-time record high. Goldman Sachs has recovered all of its losses, and same thing with Blackstone. But deal flow on Wall Street hasn't really picked up yet. So this doesn't mean, right, that 100% we're going to have more IPOs in 2024. We're going to have more private equity deals in 2024. It doesn't mean that 100%, but it could be an indicator that deals will get done. And when deals get done, fee income goes up on Wall Street again, right? If Goldman Sachs isn't taking companies public and charging for, equity underwriting, earnings go down, stock price follows. So again, a lot of the times we can use equity prices in and of themselves as leading indicators for what may happen in the economy. So if you want to read that piece that I sent out, just type !news, NEWS in the chat, and click the link to our Substack, or you can just scan the QR code on the screen and it will take you directly there and you could read it for free. I don't know, what do you guys think? You think the IPO market's going to open up again? Do you think private equity is going to open up again? Is there going to be more deal flow on Wall Street this year? I think there just might be. All right, let's head out by the Salesforce Tower. Peters is 1,035 IPOs in 21, 181 in 2022, an 82.5% drop. Yeah, I mean, so think about what that did to fee income at major banks. Sam NYC2 says lots of AI IPOs. That's another thing. We actually haven't seen almost any pure play artificial intelligence IPOs. So maybe that will start to come in 2024, maybe. Hey, Raj says Goldman Sachs co-head of mergers and acquisition was on Bloomberg today. He thought the same. Interesting, Raj. Raj, do you mind emailing that to me? I don't know if you have my email. Because I didn't see that and I would like to see that. Excuse me. My email address is walkswallstreet@gmail.com or thomas.malloy@element.com. Could you email me that interview if it's not too much trouble? I'd really like to see that. Yeah, if it's not too much trouble. Interesting. Hey, Crazy Otto, good to see you. Thanks for joining us. Oops, we're just going to be able to see the New Year's Eve ball that they dropped at Times Square. I think it also has to do with interest rates, right? Now, the Institute for Supply Management released the PMI numbers. Let's see if the internet works underground. Let's go underground. I don't know why I have the urge to go underground, but let's do it. Let's see if the internet works down here.
Attention everyone. F trains are running on these. Between Jackson Beach, Roosevelt Avenue, and Fifth Avenue, 53rd Street, because of track replacement. F shuttle trains are running between 21st Street, Queensbridge, and Lexington Avenue, 63rd Street, every 20 minutes. Free shuttle bus service is running between 21st Street, Queensbridge, and the Queens Plaza. For service to 57th Street, please use the 57th Street 7th Avenue station on the NQ.
Hey, Elizabeth Gill, what's going on? Good to see you.
There is a local 7 train to 34th Street.
Yeah, Kenny's like maybe it's warmer underground. Hang with Mark Moms says if interest rates drop, I refi. Buy another property if it rises. Expenses will rise too, rents will go up. That's an interesting point. Now, I don't even think interest rates need to drop. I think they just need to stay where they are. I have a thesis that Fed Chair Jerome Powell could engineer that big box truck almost rear-ended that taxi cab. I think so far Fed Chair Jerome Powell has done a good job, right? Even though I'm very against the Federal Reserve, but the thing is this: everybody is sort of calling for rate cuts in 2024. What if we just leave the Fed funds rate unchanged at 5.25% to 5.5% through the duration of 2024? Right, the markets will adjust. Companies will grow into their PEs and get used to the interest rate environment. I think what has been refraining and holding a lot of companies back from investing into their businesses is the uncertainty that rates may go higher. So just as long as they know that they're not going to go higher and they'll stay the same, I think that's going to spur more capital investment. And this actually isn't my idea. If you look at the Institute for Supply Management Purchasing Managers Index that came out yesterday at 10 a.m. This is the New Year's Eve ball, by the way, right there. If you look at the ISM PMI report, go ahead and scroll down about a quarter of the way down the page, and go ahead and read what some of the respondents are saying. Right, that's sometimes one of the most important parts of the report. You know, what are the respondents saying? And there was an excerpt that really caught my eye, and they said just that. They said a lot of our customers, a lot of our clients are expecting the Fed not necessarily to cut rates in 24, but at least not raise them any higher than they already are. And this is getting business owners a little bit more comfortable with taking on more debt and expanding their business, hiring more employees. So I would be in favor of just kind of holding tight here and just hunkering down. I don't think we need to cut at all. So we're late, but this is Bryant Park, Winter Village. Hey, Charlie Hammer says, hey, new watcher here. I'm enjoying what you're doing. Could you offer some insight into why the NASDAQ has had a bad start this year? Thanks. Well, thank you for watching. No, I don't know. I mean, it's only been 3 days of the year, but we've had this monstrous rally going into the end of the year. And usually when indices retest their all-time record highs and have historic extension above major moving averages, you get a pullback, right? Stocks go up, stocks go down. And I think we've been 5 weeks, 5 green closes on the NASDAQ, S&P, and the Dow going into the end of the year. So getting a little bit of a pullback here. I wrote about this. I don't know if you got my email. If you want to get it, and if you want to read the newsletter that we sent out, we sort of talked about it. If you type !news, NEWS in the chat, the Nightbot will drop the link to our Substack, and you can check it out. But if an indice gets about 10% extended over the 50-day moving average, that means some of the individual stocks in the indices are probably 15 to 20% extended over their moving averages. That's very, very overbought, right? So if we get a correction here, a normal correction, a back test, I think that's a good thing. So since the beginning of the year, we've had, what, 3 trading days, and we've had 3 days in a row of down days across the board on all the major indices. Something like that. This is the Bank of China right here. Oh, I didn't know that. Someone says it's the year of the dragon. Very cool. This is West 39th Street. But do you guys kind of notice how empty the streets are now? I mean, compare the streams of 2 weeks ago to tonight's stream. This is how it usually is in New York after 10 p.m. I'm assuming it's after 10 p.m. right now. Like Lower Manhattan, Soho is probably very, very empty. Oh, Christine, this is on the year of the dragon. I had no idea. Yeah, I don't know anything about that stuff. I don't know what year I was born. What are you if you were born in 1995? What is that? Hopefully it's the bull. The year of the mighty bull. I don't think it is, though. Diana's, it's already 10:47. Copy that. 1995 is the year of the pig. I'll take it. I'll take it. I'm not gonna say it's my first choice, but I'll take it. Look at all this garbage here. Hang with Mark Mom says, what month in 1995? I was born in May of 1995. What a month, what a year. 1995 was a good year. Would you guys agree? I would agree. 95, mid-90s. Solid year to be born, I think. Sam M says pigs are smart. I appreciate that. Windows 95. Brian says, any predictions on mortgage rates in 24? I think we'll kind of hang around right where we're at. Now, we've come down substantially, right? I mean, 3 months ago, we were doing live streams where we were covering the average 30-year fixed rate mortgage at 8.25%. I think we're in the high sixes now. That makes a big difference, right? Particularly to first-time home buyers, that's a big difference. So like I said, if rates can just stay where they are right here, right? And the 30-year fixed rate mortgage is highly correlated to the 10-year US Treasury yield. If we can just kind of hang here, I think that's just enough to where it's not going to cause a housing boom again, where you have so many people flooding the market and inflated asset prices. But it's also not going to be high enough interest rates to cause complete gridlock in the market like you've seen over the last 2 years. So, I don't know, what do you think? This is West 37th Street. This church is really nice here. Hey, Chris B says 5 to 6% is the sweet spot to prevent a flooded market and prevent people from overbuying. I couldn't agree with you more. I think that's a fantastic take. Kenny says in San Francisco, commercial real estate is starting to see activity due to 2 AI-related businesses leasing. Yeah. Now, I've had a little bit of a contrarian take on San Francisco. Now, full transparency, I've never been to San Francisco. I am increasingly interested in it for the following reason. The majority of my career, I've been in tech for about over a decade. And the deal, and everybody talks about how, Miami's going to be the next Silicon Valley, the next San Francisco. And I own property in Miami, so that would benefit me. But I will say this, okay? Venture capital is not as big in Austin, Miami, the up and coming cities than it is still in homegrown, big tech like the Valley and in San Francisco. And I think it'll get there over time, okay? But I also do not think San Francisco will ever go by the wayside and go by the wayside like Detroit. There's many people making this comparison that, San Francisco is going to decline as much as Detroit has declined. I don't see that at all. I think it's going through a tough time right now, with the homeless population, with all the drugs. I think you just need law and order there, and I think you're going to have a big boom. So to cut right to the chase, I think anybody who's deploying capital, I want to talk about a correction in the housing market. It is happening now in San Francisco. You're starting to see some fire sales in San Francisco, California now. And if I had to flip a coin, I think those are great buys. I think people are going to make a fortune there. Again, does that mean I'm right? No, it doesn't. It could be totally wrong. But that's a part of investing. You got to make a decision. But from what I've been seeing in the VC market, where founders are continuously looking to go to, San Francisco is still a top choice. Founders are still continuously going to San Francisco, taking advantage of the networking environment there, the infrastructure that's there. The only thing that needs to change is the horrible politics, right? The crime needs to change. The filth and the drugs need to change, right? And it will change. I think it will. I'm confident that it will, because the people are sick of it. Usually when you have overly extreme negative headlines, and those headlines could be justified, but that's usually capitulation. And if the underlying fundamentals are still good and healthy, which I believe they are in San Francisco, right? It's just the political hellscape is what's holding it back. I think there's going to be a major opportunity that's happening right now in San Francisco, in my opinion. Well, let me, they're taking down all of the decorations here. So this is 34th Street, Herald Square, and Macy's. Look at this. They're taking down all of the holiday decorations here. But what do you guys think? Do you think I'm missing the point on San Francisco? Do we think San Francisco is too far gone? What do you think? Adam says, I have not seen a slowdown in the LA market. The supply is just too low. It's going to take a while to build up inventory to affect prices, says Adam. Josh says, once the wokeness subsides in San Francisco, then it will thrive. Major Menace says, hey Tom, it's good to be back. Was there any investment in 2023 that surprised you by doing great? That's a really good question. Let me think about that, actually. Yes, actually, yes. I know, Tariq Khan says, Tom, you're overly optimistic. And look, I could be, right? I could be. Everything that I say on this stream, right, could be totally incorrect. I just think my personality, I've been told that my personality could be too overly optimistic and can get people turbocharged, right? And I get that, but just from what I'm seeing on the ground, I don't think San Francisco has the staying power of a New York City. Like, I think New York City will always come back, but I think San Francisco is probably right there. We'll see. But okay, so this is actually a fun question, and I think this surprised everybody, right? This surprised everybody. So in 2023, I would say the most surprising sector in the market in terms of performance, and not just outperformance, by the way. It didn't just outperform the market, it was a market leader, like a true market leader. Home builder stocks. Everybody on earth, once the Federal Reserve started raising interest rates, was calling for another 2008. The housing market's going to crash. You know, there's going to be a wave of foreclosures. People aren't going to be able to afford their mortgages. It's going to be Armageddon all over again. Instead, almost every single home builder stock on the market has performed double-digit returns in 2023 and are still trading at all-time record highs, if not 52-week highs. And in hindsight, you know, looking at it, I think one of the main reasons for that is the inventory issue. And home builders or developers, sponsors, have more tools at their disposal to get deals done, right? So in the resale market, like if I'm gonna resell my home, I'm not gonna be able to give all these concessions away, right? I'm not gonna pay the mansion tax for you. You know, I'm talking about New York City. I'm not gonna pay the transfer taxes for you. But if you're buying new development, you know, a lot of these single family home builders like Toll Brothers, Taylor Morrison Home, Pulte Group, they were buying down people's interest rates and giving them tons of concessions to get deals done. And it didn't impact gross margins all that much. So I think that was my biggest surprise of 2023. And again, it's the market does it every time. The market is designed to fool the majority of participants the majority of the time. And when everybody's calling for this housing Armageddon, we've actually had outperformance in housing stocks, which is kind of crazy, right? I don't know, what would you guys say, chat, team? What was the most surprising top performing investment of 2023 that you're like, wow, I was not expecting that at all? I'm curious to see what some of the answers are going to be there as we approach 34th Street Penn Station. John's is Salesforce. Scott's initial 2023 was solvency. Well, the initial concern was solvency if market values fell below mortgage liabilities. Didn't happen due to scarcity. Let me cross here, might as well make the light. Joel PM says the Nvidia dump that never happened. Al Baker says cryptocurrency stocks. Yeah, that's another good one, actually. You would think in a higher interest rate environment, those risk-on assets wouldn't perform well. It's actually a really good one. Josh S is Solana. I believe that's a cryptocurrency coin or something. Yeah, I don't own any of the altcoins, but I do watch some of them. And I think it's important for everybody to do the same. So even if you hate cryptocurrencies and you think they're a scam and a fraud, it doesn't matter. If you're a market participant, you should generally know where they're trading, because they can be used as a proxy for risk appetite in the market. So a lot of times those crypto coins will lead equities, because chances are people are willing to invest money on crypto tokens. Maybe their financial standpoint is they're doing pretty well. If they're willing to gamble and risk in the cryptocurrency market. So you could actually use those as a proxy for risk. Hey, Crypto Meme, what's up? Carl Ross says, Tom, 2023 shock was you paying $13 for a box of cereal. That was also a shock to me too. And it wasn't too far away from here, actually. It was right at the corner. That CVS right there is where we got banged over the head. I know, Layla says Tom is out so late on a school night. I started the stream late too. I started at 9:30. But for those of you who are just joining us, please check your emails, everybody, because before I started the live stream, I sent out our first edition, 2024 edition of the Behind the Street newsletter. It's our free investing newsletter we send out every other Thursday after the market closes. I just sent that out to everybody, so go ahead and check your email, and if you want to sign up to receive it for free, go ahead and scan the QR code on your screen and punch in your email, or you could type !news, NEWS, in the chat, and you can click our Substack link. But since it is getting late, everybody, and we are now here at Penn Station, this is the brand new 2 Penn project. Maybe we'll explore this in a little bit more detail tomorrow night. Hey, NNB45 says, this was a great newsletter, Tom. Thank you so much. NNB45, good to see you. Happy New Year to you. And welcome to the brand new Penn project, the 2 Penn. And you can see Jerry Seinfeld up there on the big screen too. Cool. So it looks like Jerry Seinfeld's gonna, oh, well, I'll read it later. All right, guys, I gotta run. I got an early start tomorrow, but it is Friday, TGIF, to all of you. Again, just want to quickly wish you all a very happy New Year, and we'll talk to you tomorrow. All right, guys, thanks for coming out. Thanks for hanging out, and God bless and good night. So Line Sync, I appreciate it. Lay the Austin City Limits, Vinny, SoCal Lawrence, Adrian, everything in Miami, Richard, Mohammed, I appreciate you very much. Unit J23, TK Porsche, NNB45, Kenny, Mary, Positive, Lance, Richard, Flat Smack, Caitlin, Baby Grinch. NAV 407. Sunshine After Rain, Lisa Davis, all of our moderators, thank you. If you enjoyed the live stream, feel free to leave a like on the video, share the show with your friends, and let me know what you think of the newsletter. Go ahead over there to Substack, leave a like on the newsletter, and share it with your friends. All right, everybody, take care, and we'll see you tomorrow. Bye.